As a trader, you wanna you wanna be you wanna have an exit strategy before you even enter the market. You gotta have an exit strategy. You know what I'm saying? Before you enter the market. And that's anything you're trading. You gotta have a strategy when to exit with a profit. You know what I mean? Because the way the market is, it rolls up and down through each candlestick. And by rolling up and down through each candlestick, most successful traders, they are called scalpers. They're doing a scalping, entering the market and exiting, entering the market and exiting. They see the pattern of, the movement of the market and see how much they can gain in a short period of time by just scalping the market, you know, in and out, in and out, you know, and that's the best way to trade the market. If you want to be a successful trader, you want to make scalping your number one priority into getting in and out with a profit, and discipline yourself to sell and take the profit. So that's basically how you want to know the market, know how to be a successful trader, and you want to know your indicators. The indicators will teach you strategies when to enter the market and when to exit the market. There's like four indicators that you would need. Four indicators. And one of those indicators are the MACD indicator, the moving average indicator, DMI, Fibonacci, directional movement indicator is the DMI, and RSI. RSI is a great indicator, and Woody CCI if you can get that one. Or you can jump into candlestick charts, wrinkle charts. Wrinkle charts and candlestick charts are like the best charts, which they got bar charts, and just knowing the strategy on wrinkle charts, wrinkle RENKO, those charts are some of the best charts. And what else? Candlestick charts. Now, understanding candlestick charts, you just gotta know different candlesticks, like the trigger, the hammer. Those are the major candlesticks that you look for when a trade is about to be successful. You look for the hammer, you look for the trigger. It's a time when they say in the market, they be like, I just pulled the trigger. I just pulled the trigger because they seen the trigger candlestick, and the candlestick, you know, came and they seen how the MACD was looking, the moving average, everything was the RSI volume. You can use volume to trade off of. You see when the specialist, the role of the specialist is the volume. And the volume, when the market is big, those big institutional investors are dumping their money into the market. So you see the volume just jumps up real high. And you only can see volume inside of stocks, futures. You can't see volume in Forex. See, one thing about volume, you can't see how much money is being traded with currency at all. It's no volume. But with stocks and futures, all that got volume, where you can see when the big institutional investors dump their money into the market makers, they dump their money into it, and you can just follow them. You can follow off the volume because you can see when they dump their money into it, and that's when the market tanks up. Yeah. But that's the road of the specialists. The specialists, they trade just off volume. That's it. Some traders don't even use they don't even use those financial, indicators to trade with. Some of them just trade using volume. Some of them just use the moving average. That one indicator, that's it. That's all they use. And I'm talking about these are, like big hedge fund investors, big, huge ones that's are, they're just using one indicator and that's it. They're not using it all. But I'm telling you, as a day trader, as a person that can enter the market any minute, any second, and leave with a profit, what strategies and what indicators you want to use and what strategies you want to have to be successful as a trader and always win on each trade, because you disciplined yourself to know your exit. When you're covering a call, that call has already been covered because the stock was trading at $10, say, and the call was going for $1. If the stock go to $11, then that $1 call is $2. Like that. Stock go from $11 to $13, and that $1 call is $3. So I'm just trying to tell you, with the call options, you got an expiration time on when that play is going to happen. It can be 1 month expiration. It can be 2 weeks. And by you knowing the market movement of the market and how the indicators is looking and where the direction is going with the market, you see when to enter the market. You're not going to enter the market without knowing what's going to be going on with the market. You're gambling then. That's called gambling. And as a successful trader, you are not gambling. You're not throwing all your eggs in one basket. That's one thing that successful traders do not do. They do not throw all their eggs in one basket. So what you would do from there, you will multiply. You will multiply from right there. Peace. You want to hear more Cash Magnet 1-on-1? The class is going to open.